This is episode 45 of the Steady Trade podcast with your host, Tim Bohen.
I don't know if we've ever really dialed in on the emotional roller coaster that trading is.
And Steven Johnson.
Probably one of the most controversial episodes yet.
Right, because Steven almost quit the podcast. Because, in the words of a broken heart and a busted account,
I don't know if we've ever really dialed in on the emotional roller coaster that trading is.
Probably one of the most controversial episodes yet.
But thankfully, Steven did come back and come home to us darlings. So that's what you're going to hear in today's episode. So if you tuned in for the second half of the Tim Grittani interview, don't worry, we'll get back to that next week. But first, let's dip into the listener mailbag. Today's question: what is the most common mistake made by beginning traders? It's not a lack of discipline and too much emotion, is it?
So, Steven, I got a question from Bill from Tallahassee. He asked, and it's a good question, what is, in your opinion, I know you are obviously a new trader recently, and you talk to a lot of newer traders from your YouTube and stuff. What is the most common mistake by a beginning trader?
By far the most common and by far the biggest, and I made it constantly as well, and you'll make it over and over and over, is trying to be the jack of all trades, no pun intended, and the master of none. So many people try and take on the crazy world of trading and all of its variables and nuances all at once, and they just get lost and drowned out in it and have random results, and they don't focus on mastering one specific pattern.
Yeah, our responses are different but similar. The biggest one I see, and longtime listeners of the podcast will probably know what I'm about to say, or if you're in StocksToTrade Pro, I talk about it every day. It's just not having a plan. I mean, if you just see some stock up 20% and you're like, oh, it's going up, I'm going to buy it, or even if you're shorting, whatever. But if you don't, why? What is the why? What is the reason you're trading this stock? And what is your stop? What is your goal? I mean, and we've all been there, but you would be amazed, I think, at how many people just click buttons and they're like, well, hopefully it goes up. So
yeah, and the one most important thing that I've learned is it doesn't matter what the ticker is or what the situation is. What we're trading is human emotion and how people react to situations of being hugely in profit or hugely underwater at different times. So so the same thing tends to happen over and over and over because the human emotion doesn't change, and all the psychology books say this. So I would say you have to see the same thing happen in a previous example or in a previous stock and think, I'm going to trade it because I've saw this happen before. Then that can be a reason, but as long as you've got a reason for it, because that's what we're playing at the end of the day, patterns.
Yeah, I totally agree. And that, I often mention, put yourself in the mindset of everybody else or the guy on the other side of the trade. And I think that is one way for you to kind of build those reps and get better and better at recognizing the same stuff over and over again.
Yeah, totally agree.
Hey there, Steady Trade listeners. Want to know how guys like Tim Grittani and Tim Bohen followed in the footsteps of Tim Sykes, earning financial security and beyond by day trading penny stocks? Do you want to see if you have what it takes, even if your name isn't Tim? No. Then why not check out the Timothy Sykes Trading Challenge, where you can be personally mentored by these guys and other successful traders. If you're interested and if you have what it takes, go to timothysykes.com and let them know that you want to work directly with Tim Sykes today.
Welcome to the Steady Trade podcast. Probably one of the most controversial episodes yet, and it's kind of the inside details to what a lot of people who've been following me on Twitter and following Tim Sykes on Twitter will kind of want to hear. But the good thing about this episode is there's a lot about kind of the controversy, but there's also a lot about the lessons that are ingrained within the controversy, the lessons that are ingrained within the experience, and how we can all learn from them and how we can all move forward. Tim, is there anything to add to that? Not the Tim that I don't like, the Tim that I do like. Just joking.
No, I think you framed it well. I mean, something that we're going to talk about a lot today is, a very important topic. And I don't know if we've ever, really kind of focused on this. And that's the emotional side of trading. We've talked about, we talk a lot about plans, charts, news, past setups, books, guests, but I don't know if we've ever, really dialed in on the emotional roller coaster that trading is. And we have a real time, we're recording this basically 24 hours after a Stephen had a strong emotional roller coaster, and that and that's part of trading. It's part of life, So I think that's our focus for today, and I think it's a very powerful topic, and I think a lot of listeners will appreciate your honesty. And I saw some of the tweets to responses to you, and I mean, a lot of people. There was a lot of positivity. There was some negativity, but I focused on the positive ones, and a lot of people said, "Hey, I've been there. I've given up, or I've given up." Some people were like, "Hey, I've given up multiple times, so I know where you're coming from, Stephen."
No, and the one thing that I think the one thing that's really valuable and the one really newsworthy thing about this episode is a lot of podcasts will push one-way messages, and a lot of podcasts they'll fire kind of one-way marketing. And what we're doing in this podcast, which is particularly special, is we're saying there was kind of an internal blow-up. And I don't want to dramatize it. It wasn't too big a blow-up. But when you're trading, when things are emotional, shit can hit the fan, and it can get choppy when that shit does hit the fan. And in this episode kind of gives the in-depth detail into what happened, how it happened, why it happened, and more importantly, the lessons that can be taken away from it.
So I'd say let's kind of start with a timeline. Why don't we, so if you've listened to some of the recent episodes, Stephen has kind of been struggling with some big losses recently. I've tried to kind of coach him through them and talk through them, and we finished up last week with last I knew, I follow your social media. Stephen and I talk here and there, but we don't converse every day. So as of last week, end of last week, I thought, okay, and Stephen had a good week. We're grinding back. So let's kind of now replay back to Tuesday morning and kind of talk me through what happened.
Yeah, I mean, for me, I was thinking that things were okay.
Actually, start with last week. So last week, you were kind of back and forth, but you ended green. So let's kind of talk about last week and then lead into yesterday morning.
I mean, last week there was a lot of positives, and there was a lot of positives. There was like a $700 green week all in all. I was finding some consistency. I was finding some consistency in a new strategy of really, really shorting the junk of the junk and waiting for the A grade, real bad junk to rise that had the 424Bs, that had the enforced S1 and S3s, and low volume, not enough buyers, a ton of sellers. It's just basic probability that they're going to go down. And I was doing well. I was up about 600-700, and then typically, as I am, I shorted the top percent gainer of the day. Million pre-market signals. It's going to trade 10-20 million on the day. 10-20 million is always going to outweigh any amount of warrants that any stock will have, so the warrants don't even matter. And I got caught in a squeeze, and once... That's funny. I've got Roland Wolf calling. He must care about his... God bless him. God bless him. I'll speak to him after. But shall we put him on the podcast? I know.
Answer it. Yeah, I say answer it.
Roland.
Hello.
You're on the Steady Trade podcast, brother. It's on speaker.
How you doing?
I'm on the Steady Trade podcast talking about how about I had an argument with Sykes on the internet, and now I nearly blew up my account.
Well, when you're done, give me a call.
Yeah, dude, I'll give you a call straight after. No worries, dude. That was rolling, everybody. That was kind of funny. Timing. Yeah, I mean, basically, I've had some horrendous errors, and I was shorting low float, medium float, high float junk, and the junk is the stuff with the 424Bs, the S1s, the S3s that go into effect, and we're talking 10, 20, 30, 40, 50 million shares dilution. And as long as the volume on the day trades 3, 4, 5, 6, 7, 8 million, it's fine. So as long as it trades 300,000 max pre-market, it's fine. The selling will always outweigh the buying, right? The problem was after a few good trades, I broke the rules, I broke the pattern. And this is what Sykes will probably say. I broke the rules, I broke the pattern, and I started, I shorted something with crazy volume. It was 1 million pre, and I just didn't cut it. And I mean, that's it. I mean, I really can identify with a good setup. I can really identify where the fundamentals are missing, where there'll be more selling pressure than buying pressure. I can really identify where all the stars align. But sometimes I just do the total wrong thing impulsively.
Well, and it kind of goes back to in these volatile stocks, particularly penny stocks, low price stocks, there's a reason, and we're kind of talking about, Sykes and his rules. There's a reason you'll hear him say 1 million times the number one rule is cut losses quickly, because the simple fact is you can line up all the stars like you said you did, and if there's enough volume and there's enough buyers, all that stuff just goes out the window. And you get run over.
Yeah, and I mean, and that's the dangerous thing with the strategy that I'm employing. And this is it's not really a Tim Sykes strategy at all. This is not what Tim Sykes teaches. Tim Sykes doesn't like shorting. He likes buying. He likes dip buying, low flow contract winners, earnings winners, stocks that have previously been.
Yeah, I don't know. Again, I don't follow all of his trades, but when it comes to shorting a day one low float stock, I don't know if he's done that in years.
Or ever in the history of doing it. He's probably never, I don't know if he's done it ever. So, I mean, the strategy that I've come out with from being in the challenge is really different to what he teaches. And I think that is an important part of the challenge, that you will go into it, you will learn different people's styles from different challenge members, and you will find what works for you or what seems to work for you. And I mean, my strategy is very different from Tim Sykes' strategy. My strategy is extraordinarily risky. And a lot of people make a lot of money from it, but you have to have the discipline to cut the loss when one of the stars don't align well, when one of the variables don't work out. And I mean, this is what happened on Twitter. I mean, I saw a lot of comments, and a lot of people were kind of like, or some people were kind of...
Well, back up. Remember, the listeners aren't going to know. So kind of, so you took this big loss. You basically, and I'm paraphrasing, I'll let you summarize, but you basically said you're done trading. I mean,
I can read the email. I mean, I was super frustrated. I'd lost some money, and I mean, basically, I don't know what the right word is, but what basically happened is for the past year, you could get away with shorting low float biotechs, mid float biotechs. You would not really see volume on a runner. I mean, we had like RAKD and stuff like that. We had the really low floats, 500,000, 1 mil, 1.5 mil. But you would really not see volume of in excess of 10 mil. From what I can remember over the past 6 months before the most recent few months. There were exceptions, but most of the time you could short stocks spiking 7 to 10% in the mornings and you'd get away with it. But in the last 2 months, the market's gone so bullish. It's had so much volume. We've had like runners that I've never even seen before, like 200%, 300%, 500%. We've seen volume in nearing 100 million shares traded in the day. And
if you're shorting that move, you're absolutely going to get not just stopped out, but destroyed. And you might not even have a chance to stop out.
And I totally agree, and that's one of the reasons why I frequently. I mean, if you follow my Twitter, you'll see me ranting about these low float short guys. But the strategy works, but it only works if you have that bullet. I mean, and I'm talking bulletproof discipline. And, hey, none of us are perfect, and you're growing and evolving as a trader. And I think you would say this before I even say this, is that discipline aspect of things is something you're working on for sure.
Yeah, but I mean, and just a prerequisite thing. So I think so. It's out in the open. So this is not Tim Sykes' fault. Because a lot of people are like, Tim Sykes, you should have taught Steven better. You should have taught him FOMO better. What Tim Sykes given the challenge was a kind of an overview of a lot of different strategies, and I adopted my own. So once you adopt your own strategy, you're on your own. You need to find the nuances. You need to find what works, what doesn't work, and you will get run over a few times, especially if you're trading a high-risk strategy. But the one thing that Tim Sykes does teach that I really, really didn't listen to is cut losses quickly. I just didn't listen to it. It's his number one rule, and I didn't listen.
And to the listeners, maybe if this is your first episode, I mean, you can kind of go back in the archives and you'll see that we had the 3-episode trilogy of the 3 big losses that Steven took. And you can't play coulda, woulda, shoulda in trading. I always joke about that. I mean, if you talk about coulda, woulda, shoulda, you're going to go insane in trading. But if you think back, and I think 3 of those losses, I think they were all about $5K each. If those were all $500 losses, where would Steven be mentally today? I think he would be probably 180 degrees in a different mindset. So,
and I mean, this is I mean, one of the things that I like about the podcast, one of the things that I hope will continue about the podcast is the transparency that comes within the institution. I mean, Tim Sykes was the lead preacher of transparency when I first started. He was the one that inspired me. No matter what I do, I have to do it transparently. And there's been times when I've lost, where I've been like, I do not want to put this shit on YouTube. And I've put it on YouTube. And for that reason, in this podcast, I think it's cool that we can talk transparently about, I wouldn't say it was an argument, but there was definitely some heated tension. And I mean, Tim's pretty cool. I've met him a couple of times in person. We've hung out in Italy together. We've hung out in Florida together. I would like to think he's still my friend, even though I kind of messed up a little bit here and there. And I think he messed up a little bit here and there. We'll have to talk about it. But I think it's important to talk about things transparently and iron them out and iron it out for the listeners. So basically, the main problem where we had the altercation was, and this is a great topic for discussion, is Tim said, you are not following the rules. I told you to do this, this, and this, and you didn't do it. And 100%, I did not do what he said. Right?
So again, make a point. I know it's kind of confusing because of all of the Tims and penny stocking. Remember to use last names. It'll help everybody. So but basically we go back to last week when Steven had taken those big losses and Sykes had hit you up and said, hey, trade 100 shares at a time, dial back.
Yeah.
Because I mean, you could still lose money on 100 shares, but you're not going to lose $5,000 on 100 shares. Yeah. So basically, and I had kind of mirrored those comments. I'm like, hey, Steven, let's cool our jets. You're obviously in an emotional state. One of the best ways to take emotion out of trading is take back the size. I mean, if you're in 100 shares, it's hard to get emotional because you're looking at a $20 loss or a $100 loss versus a $5,000 loss. And you had basically kind of agreed to do that. And then
I 100% agreed.
Okay.
I mean, there's no denying. I was 100%. Yes, Tim, I will do this. Yes, Tim Sykes, I will do that. Yes, Tim Bohen, I will do this. I 100% agreed. And I mean, there's no denying that. I mean, Tim sets out rules. Tim Sykes sets out rules. Cut losses quickly, number 1 rule. Number 2 rule, follow the first rule. It is the first rule, and you must obey it at all times. And I didn't obey the rule, and I lost because I didn't obey the rule. And it's just a hard black and white fact. There's no denying it. Like, he told me to do something, and I did the opposite. This is an absolute fact. Where the gray area comes in, where the argument comes in, is if everyone could follow the rules, everybody would win, right?
It's a great point. Yeah, it's a great point. So,
and when 95% of traders win, when 95% of traders lose and 5% of traders win, is because 5% have either they're genetically brilliant, or they have gone through the hurt, the pain, and the terror of experiencing absolute disaster to the point where they follow the rules.
And I think, again, I think back to, I loosely followed the tweets last night. I was tagged in them, so my phone was vibrating nonstop all night. There were a lot of great points. A lot of people. I mean, I had no idea who these people are. They're just people on Twitter. And they talked about, hey, we've done features about Chat with Traders. Chat with Traders is a great podcast. Aaron is a great guy. We'd like to have Aaron on someday, actually. And I saw a couple people. They're like, hey, Steven, remember Chat with Traders? A lot of these people took 5 years, 7 years, 10 years. Yeah. And that's part of what we're trying to do here, and that's part of what you're documenting with your YouTube, which is cool. Is but I also think it's added some pressure to. I think it's added some undue pressure,
undoubtedly.
And by trying to document your journey, which is I think is cool. It's a great project. Yeah. It's also at the same time, I think it's put a little bit of pressure on you, and you're like, hey, I'm 16 months into this. I'm on a trading podcast. I don't want to take this loss. I'm upside down on this trade. Everybody, Bohen, Sykes, Grittani, Eric Russell, Phil Godeker, everybody we've had on this podcast says cut losses early. But I think, in my opinion, something that is screwed with your psychology is the fact that you're documenting this journey and you're like, hey, I'm 16 months into this thing. I don't want to be a break-even trader anymore.
No, I mean, absolutely. And so many people have said this to me, and so many times I've been like, nah, you don't know what you're talking about. But whether in some sort of Freudian way it has affected me, I mean, I will never know. And the reality was, I mean, just the other day I sent Sykes an email and I tagged, obviously, Tim and Mr. Producer in the background saying, I'm done. And for about an hour or 2 hours, even though I'd lost $4,000 in the recent trade, which I've made half back since, it's $2,000 a day, which is good, but I still have no idea. I'm just free falling. But even when I sent that email, I felt free. I felt free of responsibility. I felt free of pressure. I felt that I have no obligations anymore. I just need to be a normal person. I don't need to take on this crazy challenge. And I felt a lot of relief. But within 60 minutes, 120 minutes, 250 minutes, the Jeevan in me was like, and I had some support of some good friends. They were like, they were basically saying, if you quit this, personally, and from my opinion, I was like, I just cannot. And then a couple of other people said, if you quit this, it's not about the money. It's not about the success. It's not about the story. It's about your internal maturity and development and confidence is growing as a human. And if you let this go, it's going to personally damage you rather than contribute positively towards your growth. And I thought, do you know what it is? If I do quit this, I'm going to hold it against myself forever. I'm going to be the quitter that had all of the opportunities, that all of the resources and basically the capital to do it. And I quit. because I didn't want to lose another few $1,000s. Because I couldn't trade small. Because I couldn't stick to basic rules. I quit. And that's just not an acceptable reason to quit. It's just really not. Not after you've done 2 years.
You know, and that's, I agree, you know, and that's where, that's the, you know, what that monologue that you just gave, if you had called me, that would have been that's exactly what I would have said.
We did speak yesterday. You should have given us that monologue yesterday.
Yeah, 4 hours after. I mean, you didn't give me the chance real time. I'm at the eye doctor, and I'm getting texts and Twitters and Skypes, and they're like, "What did Steven do?" And I'm like, "I don't know what Steven did. I'm at the freaking eye doctor here." So you didn't give me a damn chance, man. So yeah, we talked, you know, 4, 5, 6 hours later.
You're like, I'm not going to tote you around. Just quit. No, you didn't say just quit, but it was tough for both. And I think that, for me, especially trying to be the first person in the world to document every week that they can be a successful trader profitably on YouTube, to be the first person ever to do that it's a huge responsibility. And then the podcast got added on, and that's a responsibility. And I expect that there's going to be cracks under pressure when things go bad. But the most important thing is to have a solid support network to bring us around. And I'm not going to swear, I have to swear, but thank fucking God I've got an insane community around me of so many different people that are like, you are not quitting no matter what. You are not letting this go. And so many successful traders like, you're not fucking quitting. You've got too much talent. You've been in it too long. You're going through a bad phase. And I'm like, I love the game. And all of these people are saying this to us. Oh my God, I have to continue. And I'm continuing. And even Tim Sykes, let me read an email that he sent just about 2 hours ago. Because I think it's important to suggest transparency, and it's important to say this. He said, "Hey man, sorry I got railed up before. Not like Tim to get railed up. I get passionate and I hate seeing students lose. Definitely please do not, capital letters, give up. Just trade small and practice paper trade if you must. That way you don't lose anything and can get your confidence back over time by taking good trades. It'll make a great comeback story in the long run." So, I mean, even Tim Sykes, after we had the little argument, after we both calmed down, he was like, dude, you must continue. It's a year for Ducks. It's a year for Gertani. It's a year for Roland. But for normal people, it's a lot longer.
You know, and so I think that there's also a valuable lesson. This is not a trading lesson. This is something I will admit it's a philosophy I get from, you know, we talk about Joe Rogan a lot on this podcast, but he talks about this a lot. It's one of the downfalls of social media, you know, and even online communication, even if it's texting or whatever. You know, you and Sykes got mad at each other, but you're 5,000 miles apart. If you guys were in the same room, it would have been a completely different situation. You know, you're both good guys. You would have talked it over. But when you've got that disengagement, particularly on Twitter, because
everyone
now
wants to jump in.
Everybody wants to jump in, and now you've got a gasoline on the fire situation. You know, it's like there was this little bit of fire between you two, which happens. You were both emotional. He was frustrated you didn't listen to him. You were frustrated because you made the mistake again. But then it's happening publicly. So then the social media and the public thing is just like dumping gas on the fire. So now it turns into this freaking explosion. And so there's a valuable lesson there. If you get in a disagreement with somebody, take it offline as quickly as possible. You know,
please,
call that person.
tell Tim to call us. Give us his number. I'm like, because I know he hit the be reasonable about this, and this, and then everything was cool.
I did contact him. I'm like, hey, you guys, I was like,
just speak to each other, just email each other and talk to each other.
It was, I think everybody knows I'm a father. It's like I've got a son and a daughter. They're great kids. I love them, but they get disagreements, and you got to kind of sit them both down and be like, okay, let's all relax and let's work this out.
But I mean, that's the thing, though, and it's like 50% of the people on Twitter are successful with Tim, and they want to be avid supporters, and they have him, and then obviously 95% of traders lose, so there's a big proportion who are against him, and it just creates this epic online war. And I'm like, I don't want to be part of this war. I don't want to have this public thing. I mean, I just want to make money trading and be successful. I mean, my dream is just to document public a successful trading journey and to show it's possible. That's it. But the thing is, though, like, it was a disaster at the time. And I remember being on my phone fighting fire and giving some fire back to Tim, being like, Tim, fuck you, I'm losing. I'm like, Tim, fuck you, I'm losing. I know I didn't follow the rules, but still, fuck you. It's not as easy as I thought. Like, of course that happened. And of course I didn't follow the rules. And of course, the rules aren't as easy to follow as people think, right? That's the crux in the argument. But if we can get beyond it, if we can grow beyond it, then all of the better for the relationship between everybody, all of the better for the fact that we could broadcast it transparently, and all of the better that it's great entertainment, it's great education, and it's something. It's another.
Well, I think again, whatever you decide to do in the future, and that's what we'll talk about towards the end of the episode here. But I mean, if you're going into day trading, especially if you're going into day trading the most volatile of the volatile stocks, and you think you're never gonna feel the emotions that Steven is relaying today, I think you're in for a rude awakening. I mean, personally, I think this is an extremely valuable lesson or valuable episode, because if you don't think you're going to be down in the dumps and you're going to be thinking about quitting, I'm repeating myself, but you're in for a rude awakening, because we've all been there. Okay. I've been there. Everybody's been there.
I mean, I don't know about you, but I mean, I've never been to the point where I'm so miserable that I can't get out of bed. But like, say, for example, losing 4K yesterday, like I was lying in bed this morning thinking I do not want to go to work. And of course I had to go to work. I was 10 minutes late. But I was lying in bed saying, I don't want to get out of bed because I'm so miserable that I don't want to face the world. And if you have to, though, you have to get up, you have to go to work. Your responsibilities don't stop because you lost the trade. But it's been incredibly tough, and it's been hard, and sometimes you hate yourself, sometimes you lash out on other people, sometimes you have arguments with your mentor because you're so pissed off with shit. Sometimes you say you're going to hand in your resignation and quit because you think I am going to lose everything if I don't stop now. And these terrible, crazy things happen on this roller coaster, and it is the most glamorous, exotic thing to market. Trading is this most glamorous, exotic thing because it's the best thing in the world if you achieve it, but it's the hardest thing to achieve. Sadly, it's one of the hardest things to achieve. Emotionally, it's one of the hardest things to manage to do.
But I think, I mean, a great example today is that passion that you have for it. I mean, it's just one trade, but I mean, you're back, and you made a great trade. I mean, LTBR, beautiful. I mean, that's a great setup for your strategy. And I mean, and you were back. That's what, again, respect to you. I mean, talk about going to the lowest of the lows, and you bounce right back, and you're back at the screens. You're back at the scans. You're looking for shares to locate. You're scanning SEC filings. I mean, that shows you've got the skills, and that shows you've got the passion. I mean, you're not like just
because it's because I can't stop. It's because I won't. It's because I can't stop, and I won't quit, and it's on my mind 24/7. And if it's on Dux's mind 24/7, and he makes $1 million in a year, then good for him. He's better. He's better than me. But if it's on my mind for 24/7, it means that I'll never quit no matter what. And I might say that I'll quit and I'll be annoyed for 3 hours, but I'll always just turn around and come back. And it's okay to say that you're going to quit. A lot of people said they were going to quit. Roland said that he was going to quit when he lost $5,000 on tops that he was up on. Everyone quit. Everyone withdrew money from the funds. Everyone's done this. But the problem is, if you are not thinking about stocks most of the time, if you're not J'd up most of the time, if you're not wanting to study 3-4 hours a day every day, especially in your first year, then I would say I don't know how much it's for you, because it is a fucking roller coaster of emotions to get profitable. And maybe I'm a bit more mental than most people. Maybe I disregard the rules more than most people. Maybe I'm a slower learner than some people. But no matter what, it is an insane roller coaster to profitability. I think no matter who you are, would you not agree?
Oh, for sure. I mean, yeah, you're, you know, I think like anything, it's like you get, I mean, when I go back to like in high school football, we were an undefeated team, you know, going into the last game of the year, and, you know, we lost the last game of the year, and, you know, you cry like a freaking baby. You came back the next season and we lost. It's like, it was still a good team, but we had a couple losses. You didn't ball because you kind of been there before. My junior, you know, it's like you can't know what it's going to feel like until you've been there. And I mean, everybody can tell you. I mean, we can sit here and tell you it's an emotional roller coaster, but you know, you hadn't been to those lowest of lows, and now, you know, you don't want to go back.
But I could lose even more. I have no idea. I could lose even more, right? And that's part of the problem. That's the realism of it. The only thing I can hope is I know the volume, I see the strength, I see the chart, I see the level 2, I see the price action of when I lost 4K, and then I see the volume, I see the price action, I see the fundamentals, I see the 424B of when I made 2.2K. And if I can just register that stupid shit in my head, that this is what it feels like when you're on a winning trade, this is what it feels like when you're on a losing trade, cut the loss, let the winner run, then it's fine. But you have to feel the pain of losing big on the wrong setup to never play that setup again, to never be tempted, because you can know it's the wrong setup and still think, do you know what it is? It's not the right setup, but it looks a little bit weak. I'm seeing some little indicator that this is the wrong setup to short, but it might come down and there's no other trades today, so I'll take it anyway. This is the monster of mother of all evils, right? And when the right setup comes, if you have the patience for it, the stars align and you cannot believe your luck when the right setup comes. Like today, the stars aligned. The 424B, the light volume, the downtrend and pre-market short, the massive short in a resistance volume. It had an 80 million day and it collapsed. And it had only traded 300,000-400,000 pre-market, and it had filings for warrants. Like, this is a gimme. This is a gimme for a short. It's a terrible long. If you went long LTBR today or whatever it was, you have to study more. But like, for me, it's having just the patience to wait for the right setup, because I know them.
So I think that's a great kind of closing statement. So, I mean, where does Steven go from here? You're done trading for today. What's tomorrow bring? What's Friday bring? What's next week bring?
No, I mean, I want to say thank you, Tim, for putting up with me on this roller coaster and being supportive. I appreciate it. So a public thank you goes out to you. You've been a good mentor, although I haven't been sometimes the best student. I've had to find my own way sometimes. And this is just like anyone who's learning stuff, I think.
Well, yeah, I mean, ultimately, again, I've coached youth sports and stuff like that. I mean, it's like ultimately, the coach can only do so much. When you walk out on the field, you got to execute.
Do whatever you want. But for me, it's I blew up a 4K account. I will not refund it. I have an interactive brokers account. It was like 20,000, 21,000. I brought it back up to like 23.5. So I've made a couple of thousand back in it. And I'm working to get it above 25. And I'm for me now, my biggest problem is not cutting losses and not trading the perfect setups. So immediately I can eliminate not taking the perfect setup by taking 3 trades a week, thinking because I'm literally restricted to say I have 3 trades. I am not trading a trade unless it's a high volume short into resistance. Do you know what I mean? Or a short into high volume resistance. Or I'm not taking a trade unless it's weak pre-market and there are a ton of warrants and it's light volume. I'm not taking a short. So that's half of it. And the other half is cutting losses, and I'm struggling with it. And I can't say I'm going to be any better than it. I can tell you that I'll not take more trades because I physically can't. I'm physically restricted to 3. So I know that I can be like, I'm not taking a trade today because there might be a better setup tomorrow and I've only got 3. Not cutting losses, I can't tell you where I'm going to be. I can tell you that I can try and be better. I can tell you that I'll try and cut them, but ultimately you don't know until you're in the situation. I hope to God I do. I'm trying. I've felt the pain. I'm trying to go in with a plan. I'm trying to say if it hits this point, I'm out. As for the podcast, I hope to roll on with it. I hope to document the experience. As for YouTube, I can't stop doing the weekly videos. I'm the only person in the world who's had this idea to document their entire journey. It's too much of an opportunity to ever stop documenting videos weekly. And that's where I am. I'll have you guys as long as you have me until I blow everything up.
Well, I tell you, man, I mean, I appreciate you sharing this. I think that, this is one of our better episodes. Well, not our. I mean, this is you. And
it's you as well, though. You're part of it on this entire journey,
right? But I mean, I'm thanking you for being this honest and sharing this because, a lot of people don't share this. They don't go on a podcast. I mean, at this point, first of all, thank you to all the listeners. But, at this point of summer 2018, we're hitting 100,000 people a month with this podcast. I mean, a lot of people aren't willing to go on in front of 100,000 people and say that, I screwed this up again. I keep making these same mistakes, but it's part of it. A lot of people face this and it's just, I really think it's an important lesson and it's an important part of the journey. And I appreciate you sharing it.
And that's one thing, that's 2 things I'll credit Sykes with. And to be honest, sometimes the arguments, they're never fun. They're never fun, but it's like, I'm like, what's going to come back now? It's 2 things I'll credit Sykes with. 1, cutting losses quickly is it is the most important rule that no one can do, but it's the most important rule that he teaches. And 2, not a trading rule, but more an ethical standpoint. I really learned transparency from him, and I learned to be transparent. And he was one of the first to be transparent about everything. And when I started my trading career, I was like, I want to do that exactly. And that is my main fundamental value. So I really took transparency from him, and I will continue to be transparent for as long as I'm doing this. And I have a feeling I'll be doing it pretty much forever. And I've said this on a tweet. I was like, I will burn in flames. I will rise to the top, but either way, you will see it, and you'll see how it happens. So.
Hi, this is Jeremy from Zimbabwe, Africa, currently living in Texas, and I like to clean the house while listening to Stephen and Tim on the Steady Trade podcast.
I actually don't. My wife's just in the room next to me, but brownie points, you know what I mean?
You can register to win real, actual prizes at their website, SteadyTrade.com. And if you really like what you hear, give the podcast a 5-star rating and write a glowing review on iTunes like I did. And this is how we say goodbye in Zimbabwe.